Hello, today is August 18th, 2018. Let's go over our calls. Thursday night, we said this was a negative pattern. We should see lower prices, possibly much lower. We did move tradably lower, so as far as direction, that was the next move. As far as magnitude, it wasn't much lower. I didn't say this, but if we were going to see this potential target, we really should have gapped down smartly at the open. Without gapping down smartly at the open, the MEJT target remained in play because of strong resistance here. I thought it might not print, but that's the line, and that printed. We looked for a pattern with an early low, which is what we got. Monday, we're looking for a pattern with an early high, late low, has a tendency to be a down a day and close near the low. If it is an up day, tends to show strength early, ideally by gapping up. Well, during the day, MEJT said this drop was false and we retrace. Said this rally's false, we'll retrace. Here's a target, most likely by early Tuesday. So ultimately lower prices would print, but when they did, they said they wouldn't stick. We retraced, says this rally's false, gives us this target, most likely by Monday's close. So we have two lower targets. And unless we gap up smartly, that's my call. We had a good rally all day long, but an all-day rally couldn't close over the middle of the day high, couldn't close over the prior high. So we know it didn't accomplish what it needed to accomplish to be a meaningful rally. Now, time hasn't run out. We have early Monday, but if you don't go over this high early Monday, the odds are pretty good. These numbers will print within their preferred time frames. Well, the weekends, when we typically make our long-term calls, even though I don't tend to hold much overnight, this is a general idea, and as long as the all-time high holds, it's going to stay the general idea. We've got an impulse down, 5 waves, sharp and impulsive. All this business counts in 3, so it's a corrective wave. And according to Elliott, this high is expected to hold. I would like this high to hold too because of the fib ratios, but that doesn't really have to. You can count this any way you want to count it when you're in a consolidation. So when are we going to break out of this 6+ month consolidation and get a move that's tradable over the long term? And my answer is we're darn close. I've been waiting for a few things. One thing I'm waiting for is for us to trade as far under this line as I'm waiting for us to trade over the line by as much as we've traded under it. Now this is 317.12 points, and by Monday, I'm not predicting a gap up, but if we gap up Monday and hit 28.6715, we're going to be over the line by as much as we're under it, and that's what we need. As I've said, unless we gap up, I think we'll be down, but at least it'll be possible from here on in to be over the line by as much as we were under it without going over this high, which is what I'm looking for. If this high is going to hold, we're going to have to wait a little bit longer, but not a lot longer. That's one thing I'm waiting for. I've also been waiting for these DeMark counts to go to completion. Now, when you get 13 bars, that's completed, and this is close enough to 13. This is the sequential, that's the combo. So any more rally from this point if that happens Monday, which I'm not predicting, but if it happens, you'll be at bar 13 here. You should be at bar 13 here, and you're at resistance once you're one bar past 28.53.53. So you would set off a lot of DeMark signals to go over, to make that to go along with the wave count. Now, what happens when number 13 prints? Well, one of two things happen. One is it works, and one is it fails. Now, these are signals to indicate the market's overextended. Now, when you're overextended and it fails, you either get more overextended by making another 9 bars of countdown, set up a straight line move like this for 9 bars. So if it fails and you're going to be more overextended, you'd expect at least 9 rally days. The other thing is it fails in grand style and you have an extended move up. So if it fails, you get a big rally one way or the other. So the market's nearing its old high. Is it gathering steam? That's the question. Well, here's breadth. And as the market's challenging the old high, breadth is dropping. So fewer and fewer stocks are participating in the up move. Typically, that's not what you typically see if the market's going to have an explosion on the upside. What if it works? If it works, you have to have a correction because you're overextended. It can correct in terms of time or in terms of price. In terms of time, you can just fiddle around here for a while and not go anywhere. That can alleviate the overextended condition, but based on the wave count, I don't think that's the most likely thing to happen. Based on the wave count, the most likely thing is you'll get a wave blue 3 comparable and probably larger in size and intensity to this wave 1 down. So that's what I've been waiting for a long time. We're not there yet. It's theoretically possible for us to meet all the criteria if we gap up and hit 28.67 Monday, but I'm not predicting that. I'm not expecting it. I'm expecting, absent taking out this high early, but ideally by gapping over it, I'm expecting to see these numbers print within their preferred time frame. But we're so close to meeting all the criteria that I don't think we're going to have to wait a lot longer to see if my scenario that I've been waiting for some time is actually going to work out. And that's today's call.